Ever wondered what separates professional ODTE traders from the rest? It's not just about luck or hitting home runs. It's about a disciplined, repeatable daily routine. Today, I'm pulling back the curtain and showing you exactly what that looks like, minute by minute. Stick around, because mastering this process is what truly builds consistency. The professional trading day starts long before the opening bell, around 8 a.m. Eastern Time. This is the preparation phase. The goal is to build a complete picture of the market environment before a single dollar is put at risk. I start by checking the overnight futures action on EASE, NQ, and RTY. What did the market do while we were sleeping? This gives me an initial sense of sentiment. Next, I pull up the economic calendar. Are there any major market-moving events scheduled for today? I'm looking for things like CPI data, jobs reports, or speeches from Fed officials. These events are volatility bombs, and you need to know exactly when they're set to go off. Then, I turn my attention to volatility itself. I check the VIX and, more importantly for ODTE, the VIX1D. This tells me the market's expectation of movement for today. Is volatility high or low? Are we in a calm regime or a chaotic one? I also measure the size of the pre-market gap relative to yesterday's trading range. A large gap up or down tells a very different story than a flat open. After gathering all this information, I form an initial hypothesis for the day. Will the market likely trend? Will it be choppy? Or will it stay within a range? This sets my initial directional bias or tells me to remain neutral. Now, for a crucial rule, avoid the first 30 minutes of the trading day from 9:30 to 10 a.m. The market open is a storm of activity. There are massive liquidity imbalances as overnight orders are filled, which creates violent price swings or whipsaws. This is where inexperienced traders get chopped up. The market needs time to settle and reveal its true intentions for the day. Professionals know this, and they use this period to observe, not to act. We wait for the dust to settle before deploying capital. Once we hit 10 a.m., the first real window of opportunity opens. From 10 a.m. until noon, the market has usually established a clearer tone. Now I can start evaluating potential strategies. Depending on the volatility regime and my daily bias, I might consider setting up an iron condor or an iron butterfly for a range-bound day. If I have a directional lean, a credit spread might be more appropriate. I'm constantly assessing the expected range for the day. My delta, exposure, and the liquidity at the strikes I'm considering. The key here is to only take trades that align perfectly with the conditions you identified in your pre-market analysis. Don't force a trade that doesn't fit the environment. Then comes the midday quiet period, roughly from noon to 1:30 p.m. This is often called the lunchtime doldrums for a reason. Volume tends to dry up, and price action can become noisy and random. This is not the time to be opening new positions unless an absolutely exceptional opportunity presents itself. Instead, I use this time to manage my existing trades. Are they behaving as expected? Do any adjustments need to be made? This is a period for reassessment and for preparing my plan for the afternoon session, which is often the most important part of the day for ODTE. The real action often heats up in the afternoon. We call the window from 1 April 3rd power eventu gita. During this time, the market's direction for the day often becomes much clearer. As we approach the close, time decay, or theta, accelerates dramatically, but more importantly, gamma risk starts to spike. This means options prices become incredibly sensitive to small movements in the underlying index. The key is that by this time of day, you have a lot more information to work with than you did in the morning. You've seen how the market has behaved for hours, and your trade thesis is much stronger. Now, let's talk about the final 10 minutes. From 3:52 p.m., this period is driven by huge institutional order flows, specifically market on close, or MOC, orders. Big funds, ETFs, and institutions need to execute massive trades to rebalance their portfolios right at the closing price. These flows can push the market sharply in one direction with very little warning. As a ODTE trader, you do not want to get caught on the wrong side of this. This is why professionals manage their positions proactively before this final 10-minute window begins. The goal is to be flat or have your risk significantly reduced as we head into the close. But the day isn't over at 4 p.m. For anyone holding long equity options, there's after-hours risk. An SPY or QQQ option that expired, seemingly worthless at the 4 p.m., can suddenly become in the money if the market moves after hours. This is especially true on days when major companies like Apple or Nvidia report earnings right after the close. A big earnings surprise can move the entire index ETF. If you're holding a call or put that is very close to the money, you need to monitor the after-hours session. You may need to decide whether to exercise your option and must notify your broker if you choose to do so. This is a nuance many traders overlook, and it can be a costly mistake. Of course, a professional's routine also involves knowing when not to trade. There are certain high-risk days where the odds are simply not in your favor. These are days with major economic data releases at 8:30 a.m. like CPI, PPI, or the jobs report. Another one is an FOMC decision day, with the announcement at 2 p.m. followed by the Fed chair's press conference. These events inject extreme, unpredictable volatility into the market. There's no reliable edge to be found here. On this day, many professionals on the sidelines entirely. Preserving capital is always the number one priority. Finally, the day ends with a review. This is non-negotiable. I go back and analyze my trades. Which setups worked and why? Which ones didn't? What was the true volatility regime of the day, and was my initial assessment correct? I review my delta, management, and risk control. Most importantly, I document my mistakes. Did I enter too early? Did I exit too late? All of this gets recorded in my trading journal. This process of self-evaluation is what allows me to refine my strategy and come back even sharper the next day. And that's the full daily routine of a professional ODTE trader. It's a structured, disciplined process focused on preparation, risk management, and continuous improvement. It's not about gambling. It's about operating a business. Thanks for watching. If you found this breakdown helpful, make sure to like this video and subscribe for more deep dives into professional trading strategies. See you in the next one.